everyone. This is Mario Yanez, Finance 128, and today I am bringing you another video on trading futures. The commodity that I will trade will be oil or crude oil, most specifically. It's a common commodity around the world since we use it, and yeah, might as well execute the trade. So, before, of course, executing the trade, we also need to provide reasons on why I'm either going to short or long this certain trade or commodity. So, what I did is I used four indicators that aren't too bad when it comes to executing short to medium term trades, specifically the moving average on the 50 length, the RSI, the MFI, and the CCI. Now, looking at the moving average, it seems that it would most likely try to test the resistance when it reaches at this level. It might peak, but my assumption would be that it's likely that it might fall down. And it's even according to these previous two executions that occurred. We do see that it was, of course, testing it, but then it went down, higher high, higher lows. As for these three indicators, there isn't that much of an indication for these two since they're in the middle. It's neutral. However, on the CCI, it's somewhat in the middle, but again, I would assume that it's most likely going to try to test it when it reaches at this level. And the CCI will most likely, this line will most likely go above or near the 100 line, and we'll try to test that resistance as well. My assumption is that it's probably going to fall down in price. But other than the technical side, I've also conducted research to crude oil. One of them from Reuters, and the other one is from the Times. And just to summarize these two articles, it's anticipated that in terms of barrels per day, it's going to increase approximately 104.7 billion BPD, and that's for 2025. As for 2024, it is 102.6 million barrels per day, and as you can see, it's an increase in supply. But there's a lot of reasonings on why this has happened, which is by non-OPEC producers, some countries, including the US, Canada, and Argentina, and their output is expected to outpace the relatively modest demand growth. And then, other than that, though, the IEA, or the International Energy Agency, forecasts that global oil supply will exceed demand by over a million BPD in 2025. And it's potential that it will lead to a supply surplus. So, of course, the simple economic definition, supply and demand, when there's a lot of supply, there's going to be a shift in demand. And that's the way I see it and envision it. So, with that being said, I'm going to short it. So what we do is we go to trade, products, crude oil, and I'm going to bid. Ask is for buying, bid is for selling. So I click on bid, see how many contracts I want to short. Let's do 5. Limit order 70 and 11, and confirm to send. And then here are the details. There you go. So that's how to simply execute the trade, and let's see whether my prediction is correct. But other than that, it's been Mario, Finance 128, and I'll see you again. Peace.